A rise in gold prices indicates that the Federal Reserve is making a mistake with its policies, that cutting interest rates was a mistake, and that rates should be raised because they are now too low. Still, I take that as a more substantial caution. As a result of governments and central banks around the world losing faith in the dollar, its use is on the decline. Whatever they do in response to what's about to unfold will only serve to intensify the problem. Someday, I predict that gold will be valued half the Dow Jones. I brought up the fact that the Dow was 45 Oz of gold in 1999 and is currently 11 Oz. My prediction is that we will be down to 2, maybe even less, but for the sake of argument, let's say 2. Can you tell me where that is? A Dow of 20,000 and a gold price of 10,000 would be plenty. A major bear market would ensue though. After reaching 46,000, the Dow still has a ways to go before it crashes. Suppose the Dow reaches 50,000. Now that gold must reach 25,000, you have a 2.1 ratio, correct? To that end, there may be one possible mechanism. Or the Dow may reach 40,000 as gold falls to 20,000. It is 25,000 indeed. What few on Wall Street are willing to acknowledge is being subtly signaled by gold. Money is changing hands in a big way. Gold appears to be recovering its position as the dominant and true indicator of value as the Dow to gold ratio keeps falling. As happened in 1932 and 1980, gold might soon trade at half the value of the Dow, or perhaps reach parity if history repeats itself. The message remains unchanged regardless of whether the Dow drops to 20,000 or gold reaches $25,000. The legitimacy of fiat currency is dwindling, and physical assets are rising to their proper position in the international economy. Among the most vocal and persistent proponents of sound money, Peter Schiff issues a warning that nations are moving away from the dollar standard and toward a gold-backed framework, although one in which the United States does not take the lead. Major institutions are shifting their focus to gold, central banks are decreasing their exposure to treasuries, and even the most famous figures on Wall Street are raising concerns. The start of a precious metals bull market that will last generations is, according to Schiff, a watershed event in the history of international banking. There will be no monetary reset. It has already begun. The excerpts from Peter Schiff's interview are now presented. Prior to proceeding with the discussion, kindly subscribe to our channel and enable the bell symbol to receive timely updates. I hope you have pleasure in the video. In my opinion, the value of gold will eventually equal half of the Dow Jones. So I brought up the fact that the Dow was 45 Oz of gold in 1999 and is currently 11 Oz. Consequently, I predict that only 2 will remain. Allow me to refer to it as 2 even though it may be lower. Can you tell me where that is? A Dow of 20,000 and a gold price of 10,000 would be plenty. A severe bear market would ensue, nevertheless. After reaching 46,000, the Dow still has a ways to go before it crashes. Suppose the Dow reaches 50,000. Well, the price of gold has to reach 25,000 now, and your odds are now 2.1. Then that could be one way it takes place. As an alternative, the Dow may reach 40,000 and gold 20,000. It is 25,000 indeed. When the last 2 big U.S. stock market crashes finished, the Dow and gold were at a 1-to-1 ratio in 1932 and 1980, respectively. During those 2 significant stock market lows, you could have purchased the Dow for roughly 1 ounce of gold. Please understand that I am not arguing that the Dow should equal 2 grams of gold. 2 ounces of gold seems like a reasonable price. At 2 ounces of gold, I would gladly purchase the Dow. I'm merely stating my belief that the Dow will become extremely inexpensive in the event of the kind of drop I anticipate. At this point in the market's downturn, it will not represent fair value. Just as stocks will be absurdly expensive at the top, they will also be absurdly inexpensive at the bottom. However, the amount of gold needed to implement a return to a gold standard would likely be $20,000 to $30,000, given the current level of debt and the circulation of currency. Without us, I believe the world is returning to the gold standard right now. I predict that gold will be the primary asset backed by foreign central banks' currencies. Even if they don't make them convertible into gold, they'll still use gold as a hedge against the depreciation of their currency. What this implies is that they have stopped purchasing treasuries. What about the other people who aren't purchasing treasuries anymore? Perhaps people from the United States. Rather than a 60-40 split, the strategist at Morgan Stanley suggested a 60-20-20 allocation of 60% equities and 40% bonds a few weeks ago. 60% in equities, 20% in bonds, and 20% in gold, a bond sell signal. Invest half of your bond portfolio in gold. Now, if Wall Street accomplishes that, and if the typical American's portfolio goes from 60-40 to 60-20-20, it can only imply that Americans will sell all their bonds and buy gold. If no one is interested in purchasing the debt that the US government is offering, how will it pay for these enormous deficits? Yes, that is the issue. For this reason, the Federal Reserve will engage in large quantitative easing, which will lead to enormous inflation. That will just make the situation worse. In addition, I came upon a comment by Jamie Dimon today. He has stated his belief that the price of gold can easily reach $10,000, and possibly even higher. However, Jamie Dimon stated the following. Having some money in gold is not completely crazy, he stated, a first in his career. It has never been totally insane, though. Actually, it has been completely reasonable. Jamie Dimon was perplexed as to why. When prices were 300, 400, 500, and 1,000, my comrades and I would advise folks to acquire gold. It wasn't until now that Jamie Dimon really understood. Things that have troubled me for the past 2 decades are finally beginning to occupy his concerns. At last, Dimon is starting to get concerned. The problem is that more and more Wall Streeters are now worried about the same thing they should have been worried about before. Now that we've gone so deep down this rabbit hole, surely there must be a way to get out of here, doesn't there? I was able to avert the crisis because I began discussing it at an early enough stage. Now is the time to fasten your seatbelt, isn't it? There will be a crash. You must therefore purchase gold. Silver must be purchased. Going to sell gold is a good idea. Whenever I give interviews these days, I always advise people to go to the conclusion, put the video on hold, and then go to Shift Gold to buy some silver and gold. Reason being, it will cost more if you leave it until the very end of the interview. Go ahead and spend some actual cash on it right now. Furthermore, I believe that individuals ought to put their money into foreign equities, specifically gold stocks. The value of gold-backed stocks has more than quadrupled so far in 2018. Despite their trebling and quadrupling in value, the equities I own are still quite inexpensive. You have only scratched the surface. Very few people actually hold gold or these stocks. The gold and silver markets, as well as these mining stocks, are about to have a bull run that will last generations. Although we are in the early stages of the bull market, this period will not be brief. I'd say it will continue for the remainder of this decade and into the next. If the price of gold continues to rise, it might be a hint that the Federal Reserve is making a mistake with its policy decisions and that interest rates are now too low and should be raised. In addition, I see this as a more significant signal that governments and central banks throughout the globe are beginning to see the dollar for what it really is, a volatile and unreliable store of value. They don't trust Congress or the president to fix the country's budget, and they also don't trust the Federal Reserve, which is under constant political pressure from Trump to lower interest rates, print money, and cause inflation. The dollar is losing its global luster, in my opinion, and the gold price hasn't risen and fallen like this since the 1970s. The gold market is booming this year. Gold's annual percentage gain is about 60%. Plus, pinpointing the exact year it occurred requires research into the 1970s. For a number of years in the 1970s, it was indeed the case. However, we abandoned the gold standard in 1971, which is a major event that occurred in the 1970s. The monetary system was forever changed when we accomplished it. Additionally, the value of the dollar plummeted. An ounce of gold so rose up in price from $35 to $850. However, the current events are equally important, if not more so, since the United States is no longer the only country abandoning the gold standard. Everywhere you look, people are abandoning the dollar standard. U.S. prosperity and living standards would plummet if this happens, as our reliance on the dollar as a reserve currency has grown over the last half-century. That's the secret to our ability to spend more than we earn. These trade imbalances are made feasible by it. So we can purchase things and eat things that we don't even have to work for, because we are drawing on the resources of other countries, including their savings and production. It is possible for many Americans to take out loans without saving a dime. The dollar and its value provide the means for this. The dollar's decline in value means we can no longer depend on exports and foreign savings, and it spells disaster for our entire economy, as we are unable to manufacture the goods we consume and cannot service our enormous debt without importing production and factories from other countries. The economy is thus about to experience a catastrophe on a scale not seen since the financial crisis of 2008. A U.S. dollar crisis, a debt crisis, or some other monetary catastrophe should be imminent, and that is the message gold should be sending. Here we have the economic canary in the coal mine, and it's dying. In my opinion, this serves as a more ominous precursor to the 2008 financial catastrophe than the subprime mortgage crisis of 2007 did. I could see the implosion of the subprime market and the subsequent financial catastrophe coming years before it happened, so I was prepared for it when it happened. However, not only the Fed but the majority of Wall Streeters were clueless. No need to fret, Ben Bernanke assured everyone even after the subprime bubble burst. I was also aware that it was completely absurd. The issue is, it's happening again. For years, I have patiently waited. What's happening in gold is something I've been forecasting for a long time will happen. The same reasons I foretold it would happen are now playing out. Now it's proving what I've suspected for decades, not just years, that we're in the midst of a currency and sovereign debt crisis. Plus, it might take place next year at the latest. Gold and silver should be in everyone's possession. Seriously, I've been stating this for the past 2 decades. A purposeful distortion of money is the origin of the current economic crisis. The last connection between the dollar and its actual worth was lost when the U.S. left the gold standard in 1971. Since then, inflation has served as a tool for government spending and expansion, serving as an unseen tax. Sound money, supported by physical metal, turned into a promise based solely on faith. Political interference with the monetary system, spiraling debt, and careless spending have all chipped away at that trust over the years. The government that caused the national debt and the dollar's loss in purchasing power is now ready to blame business for the consequences. Surprisingly, that is not the case. Capitalism was successful. Honesty in money did. Gold and silver, which cannot be printed out, are the true assets, not paper promises or fiat illusions, that provide a protection. Something is going wrong with the system, and the mistakes of the past are happening again. Please return to the interview, because the government will pin the economic downturn on capitalism when it happens. Plus, I think it's important for everyone to understand that the government is to blame and that capitalism is the sole viable option. We need less government, not more. It is important for individuals to take precautions. The average American will be hit hard by inflation, therefore they need to take precautions. A release from bindings is necessary. You should start investing in gold. You should start investing in silver. Going to move gold requires you to have actual money on hand as savings, not just fiat. As you pointed out, hedging your bets with gold or silver can help protect your crypto holdings in the event that they too fall. It might be wise to keep some precious metals on hand. Our partnership with BitPay streamlines the process of selling cryptocurrency at Schiff Gold. You may put some gold or silver in your virtual shopping cart and pay for it online. We're among the first businesses to partner with BitPay. Additionally, you have the option to pay with Bitcoin during checkout. This allows you to get both gold and silver with only one transaction. And if you're looking to diversify your portfolio and generate income from equities rather than real gold and silver, you can do so with a larger portfolio. The mutual funds are mine. I run a firm that oversees investments. That's what I do for a living. A legal definition of a dollar was 1 ounce of precious metal. A dollar was therefore defined in that way. Money wasn't backed by gold. That wasn't the problem. Golden dollar was the currency's description. The currency was silver. Private banks did issue banknotes back then, but they were essentially just promissory notes denominated in dollars, denominated in gold and silver coins. To be clear, the original notes issued by the Federal Reserve, which were established in 1913 as a sort of private banking syndicate, were not dollars. Actually, even if you were to pick up a Federal Reserve note right now and read it, it would clearly state that it is legal money. This dollar is not mentioned as legal tender. Message received. Also, a note is an assurance of payment. Money was initially exchanged for those assurances. Gold and silver were the mediums of exchange. While the Great Depression was raging in the United States in 1933, President Roosevelt banned the ownership of gold and temporarily prohibited the convertibility of notes to legal dollars. Now, you can't exchange your Federal Reserve note for gold at any of the Federal Reserve banks. They intended to provide a massive stimulus, but they lacked the printing press that modern society takes for granted. An ideal condition existed for us. Consequently, Roosevelt effectively distributed $20 per ounce of gold to all citizens. The government demonetized the dollar after acquiring the gold and then announced that the previously confiscated gold was now worth $35 per ounce. Because of that, the federal government in the United States has a lot of more funds to invest in economic stimulus programs. That was the way the stimulus was implemented. Roosevelt kept the public in the dark about his plans for the dollar's worth when everyone cashed in their gold. To outsiders, though, he never did such a thing. Dollars held by individuals outside the U.S. were never made unconvertible to gold. Even though Americans couldn't redeem their Federal Reserve notes for gold during the post-war Bretton Woods Conference, any foreign bank that owned Federal Reserve notes, be it German, French, Japanese, Italian, or any other, could redeem them for gold. Plus, for $35 or whatever in notes, they could exchange it for 1 ounce of gold. That was the pact we struck with society. The Federal Reserve note was actually a bond-like pledge to pay a certain amount of gold. That persisted all the way into the late 1960s. The issue, though, was that the United States government began to incur significantly larger budget deficits in the 1960s. Not by today's standards, but by those of the time when we were engaged in the Vietnam War. Amidst the Great Society's anti-poverty initiatives, we were engaged in combat. The space program was being funded by us, Government expenditure was high and deficits were widening, so the Federal Reserve started printing money to pay for them. But the gold was not in our possession. There wasn't enough gold on hand to cover the notes. This was acknowledged by numerous international nations. "We don't think America has the gold," they added. "As a result, we will acquire it. These Federal Reserve notes will not be held by us." America's default is not something we will sit on our hands. Immediately, we will be transferring these funds to the Federal Reserve in order to procure our gold. Consequently, that began to take place. Because the world justifiably no longer trusted us, all this gold began to flee the United States. Nixon at that point had a decision to make. Reduce expenditure by the government, keep spending in check. Stop the gold from fleeing the country by being fiscally responsible. Perhaps they could print more money, causing the dollar to lose value and driving up the price of gold. Let a deflation happen. Nixon may have acted responsibly from a political standpoint. The question is, why would he wish to do it? I see. In an effort to avoid taking responsibility, they considered ways to keep running large deficits. They reasoned that closing the gold window would be a good temporary solution. Its intended duration was brief. I think we should just default to halt the bleeding. Their main action. We will no longer allow you to receive any return on your investment. He proceeded in that manner. The majority of 197 people voted that we will not be honoring these notes at this time. As a result, you cannot purchase 1 ounce of gold from the Federal Reserve with $35 or $42, according to our devaluations, depending on which amount you possess. Nothing you do is correct. Therefore, we will only offer you 2 20s or 4 10s if you have $40. There will be no gold given to you. The dollar's value plummeted in the 1970s because of that. To be more specific, the value of the dollar fell by about 2/3 when compared to other fiat currencies. In comparison to the mark, the franc, and the yen pound, it fell by around 2/3. But it was in relation to gold that the decline was most noticeable, as the price of the precious metal soared from 35 talmaz at the turn of the decade to 850 Oz in 1980, its peak. For that reason, a barrel of oil cost $3 in 1970. As of 1980, they were at 40 BBL. It was the Arab nations, according to many at the time, right? They were the ones responsible for the oil price spike that screwed us over. However, the truth is different. Instead of gold, we offered them paper as payment for their oil in an attempt to swindle them over. Plus, they were eager to sell us oil for $3 per barrel when we were actually paying them. To be clear, it was gold at that point. However, they demanded $40 when we attempted to simply provide them with paper from the printing presses. Nobody is to blame. The regulations were altered. We depreciated our money. We should not be surprised if they decide to increase costs to make up for it. A common delusion at the root of every economic downturn is the idea that governments can simply borrow money and create more wealth. The United States has reached a tipping point as its debt and inflation continue to spiral out of control. The decline in buying power isn't a coincidence. Decades of purposeful policymaking yielded this result. As the dollar's credibility continues to decline, the stage is being prepared for a worldwide rebalancing of currencies due to successive rounds of stimulus and interest rate manipulation. Inflation is more than a statistic, as Peter Schiff has consistently cautioned. The productive class gives money to the political class, and the savers get debt. Gold has reemerged as the ultimate safe haven for real capital due to the dollar's decline. The next 10 years will distinguish between pretense and reality, between speculation and reality. Those who are aware of this change ahead of time will safeguard not only their wealth, but also their independence. Feel free to chime in with your opinions on his analysis down below. Please subscribe to our channel and enable notifications so you don't miss any of our future videos if you enjoyed this one. Watch this video and we'll see you later.